Thanks very much, and good morning everyone. It's a great pleasure to be back in Perth, which is my hometown, and good chance to see my mum and family. Probably see more of them than I do of my husband and son, as I spend quite a lot of time on the road nowadays. It gives me great pleasure to be here talking to you today. FAR is very fortunate to have been involved in the world's largest oil discovery for 2014 and 15. And has only just been surpassed in the last couple of months by the Liza field offshore Guyana in a discovery by ExxonMobil. It's wonderful for an Aussie company to be involved in such a brilliant project, and I'd like to tell you all about it today and what our plans are for the future. Although we call it a discovery, we're now in pre-development mode, so we've moved a lot further on than this just being a mere discovery. So firstly, a little bit about FAR. We're an African-focused oil exploration company. We're the sixth, we hover between the fifth and sixth with our friends at AWE, largest pure E&P company on the ASX. Our market cap is about 320 million Australian dollars. As I said, I don't know if I mentioned it before, but we had the world's largest oil discovery for 2014 and 15. And as we've recently released, just updated in August, the SNE field, which is the name of the field, the subject of the world's largest oil discovery, has a 2C contingent recoverable resource of 641 million barrels to date, of which there are 96 million barrels net to FAR. It's been an incredible journey for our team at FAR from the day we spudded the SNE well in October 2014 to today, and in 21 months we've gone from discovery in a completely frontier acreage through to a statement on commerciality in our joint ventures now in pre-feed and concept select mode for development. Our cash sits at just under 70 million Australian dollars, and we have no debt, and we're funded through our foreseeable work program. We were fortunately awarded the Breakthrough Company of the Year back in June by the Oil and Gas Council for Africa, which is very prestigious and great to be recognised on an international stage. So FAR's been in Senegal for 10 years now. In fact, in May we had quite a celebration in Melbourne and had some Senegalese representatives out and had our 10-year anniversary. Anyone who says these discoveries happen quickly, I can assure you it's been a long time coming. Senegal is a country that not a lot of Aussies know a lot about, purely because it's such a long way away. And for someone who visits there every month and it sits on the plane for 30 hours to get there one way, believe me, it is a long way. It's the westernmost tip of Africa. The capital is Dakar, that sits on the end of the Dakar Peninsula, which is this tip you can see here out of Senegal. Dakar's right on the edge. And a population of about 14 million people. Most people, when you say West Africa, you can see them pulling back because of turbulent times, I guess, in that part of the world. But in Senegal, it's a very peaceful country. They've had 200 years of democracy, even though they've had occupation by the Portuguese and the French over that period. And they have very peaceful elections. I think it's got a lot to do with the fact that they are a fairly homogeneous population with about 95% Muslim community. FAR's got very strong in-country relations. We've had the same in-country manager for the whole period that FAR's been in country. We actually seconded her to the operator Cairn Energy when we started the drilling program for a period of 2 years to make sure that Cairn's introduction to Senegal went smoothly. Back in 2013, FAR farmed down our 90% equity interest in the 7,500 square kilometre blocks you can see there shaded in red to Cairn Energy and also to ConocoPhillips, and we were free carried through just under $200 million worth of drilling as part of the farm out deal and got $10 million in cash as a contribution to back costs. So as a result, the joint venture mix now is Cairn Energy are our operators with 40% equity, ConocoPhillips 35%, FAR retains 15% equity, and the government of Senegal through the state oil company Petrosen have 10%. Many of you would have read in the paper that ConocoPhillips are exiting deep water exploration globally, and they've recently agreed a proposed transaction to exit the Senegal project, and I'll talk a little bit more about that later. One unique thing about Senegal, and something for I guess, Trivial Pursuit fans, if that game even exists anymore, is that the president of Senegal is a petroleum geologist. It makes life very easy for us when we're trying to get clearances for rig import-exports and all sorts of logistics in country. He understands exactly what's involved in oil exploration, and we've enjoyed very good cooperation with the government at all levels because of that. So let's take a look at the landscape offshore Senegal before we drilled our first discovery well. This is about mid-2014. There had been no exploration wells drilled offshore Senegal for a period of 40 years, and there had never been a deep water well drilled offshore Senegal. As we all know, there's been success to the north in Mauritania, and there's been a little bit of pottering around in Guinea-Bissau, the country to the south. So Mauritania up here, Senegal in the sort of Pac-Man shaped country, and then Guinea-Bissau to the south. Far holds acreage down in Guinea-Bissau also. The Gambia is a country that sits in the mouth of our Pac-Man. Our acreage here is about 7,500 square kilometres, and we have about another 4,000 square kilometres under option in the Jafir block. This is the status in mid-2016. FAR and our partners drilled 2 large basin opening discoveries in the FAN-1 well and the SNE-1 well in 2014. And at the end of last year and through this year, Cosmos, a US-listed oil company, and their partners, Chevron to the north in Mauritania and Petroteam to the south in Senegal, made extremely large gas discoveries, and they're claiming the complex is about 30 TCF to the north. So from having no deep water exploration at all, Senegal is now a hotspot for oil exploration globally. As our joint venture, we've now drilled our 2 discovery wells, and over 2015 and 16, we've drilled 4 appraisal wells, and they've all been successful. So we've had 6 out of 6, 100% success rate with the drill bit offshore Senegal to date. Cairn Energy, just last month, released of their view of the economic situation offshore Senegal, and indeed they're stating that the NPV per barrel at FID is going to be about US $12.50, which is truly a world-class development and is indicative of the type of reservoir we've got and also the terrific PSC terms that we have in country. So when your partner decides to sell out for $2.20 a barrel, you can see why a lot of us would be very keen to consider our preemptive rights to the deal. Let's take a little look at the geology. This is an east-west profile from the onshore is way over here on the east, out to the deep water in the west. Water depth ranges from about 1,000 metres here to about 1,500 metres here. And you can see we have a number of play types. We have a deep water fan play. Our hydrocarbons are being cooked out here in our sauce kitchen, migrating up dip and getting trapped in our shelf edge. And then indeed, we have another play type called the Berry Hills that sits up dip from the shelf edge. The first well we drilled and announced the results in October 14 was a well we drilled in the deep water fans. This was extremely exciting for us. It was a long well and very expensive, and we had some issues with blowout preventers along the way. But I equate it to childbirth. You know, it's painful at the time, but the results are really worth it. A lot of you in the room probably wouldn't be able to relate to that, I'm sure. One thing we saw in this well was we had a 500-metre oil-bearing zone, which was really exciting. One of the key risks out here, of course, was the presence of source was unknown. We know that in this part of West Africa, the source rocks turn on and off, and whether they existed out here and had the capacity to be filling the billion-barrel traps that we had mapped was a complete unknown to us. So seeing a 500-metre oil interval was a great start. And indeed, the range of oil types we saw, so we went through a number of different oil columns in this well, ranged from 28 to 41 degrees API, so nice light oils in general. And although we haven't converted our field yet into contingent resources, our operator has just quoted oil in place, and it ranges from a P90 of 250 million barrels up to a P10 of 2.5 billion barrels. At some stage, we'll come back and appraise this discovery. But the second well we drilled was the SNE-1 well, and it was the well we drilled into what is now, a very large oil field. Important thing about the fan was that once we drilled that, we realised we did have a very prolific oil-generating source rock, and that anything we drilled up dip from fan was likely to hold some oil. And indeed, 1 month later, we announced the results of SNE. Many of you would remember November 2014, because I think when we announced the well results, the oil price was $85. It was just magical. And within 3 months, it was $40. So you can imagine what happened to our share price after the euphoria of making a huge discovery. So our oil is very light, 32 degrees. We had a gross oil column of just under 100 metres. And we've just updated our contingent resource numbers that were audited by risk. And our 1C, or 90% chance, we've got 340 million barrels, our 2C at 641, and our 3C at over 1 billion barrels. Now, after the appraisal work that we've done, our oil field actually has a footprint of 350 square kilometres. So it's a pretty big oil field. So let's take a look at the cross-section through the field. And this is rather indicative of where we've drilled our appraisal wells. We started our appraisal program towards the end of 2015, and we set out to drill 4 wells. We actually set out to drill 3, and then we added a well to the program because it was so successful. But the objectives of the wells were to get us closer to understanding the commerciality of the SNE field. Remember, at this stage, we only had 1 well into it. And so the core ingredients, of course, to get towards commerciality are going to be understanding the size, understanding how the deliverability or how well that oil flows, and then understanding the connectivity, i.e. how connected are our reservoirs across that whole 350 square kilometres. And of course that impacts the economics because it impacts the number of development and wells that we'll need to drill in the future. So we set out with an appraisal program. Our discovery well here is SNE-1. We stepped out to the north first, then to the south, then we drilled an exploration target, and then we drilled out into SNE-4. What we soon discovered when we were drilling our appraisal wells was it was a bit of a problem for us, but it was a wonderful problem to have, and that is we wanted to step out off the gas cap so that we could flow some of the thinner sands that were sitting in the gas cap when we drilled our original discovery well. And every time we drilled an appraisal well, every time we drilled an appraisal well, thinking we were stepping off the gas cap and out into the oil, we realised we were still in the gas cap. And what that meant was that our field we'd originally mapped as being shaped roughly like this was actually shaped like this and was getting bigger with every well that we drilled. So a wonderful problem to have, but it wasn't until we drilled our last appraisal well that we actually got off the gas cap and managed to intersect some of the secondary reservoirs in the oil leg. So here, if we start with size and look at the objectives of our appraisal program, over the period of drilling our appraisal wells, we went from a pre-drill P50 of 154 million barrels in this particular target zone, up to where we are now, and progressive releases of the size of the field growing as we drilled our appraisal wells. And as I said earlier, we're now at a 2C of 641 million barrels, which is just fantastic. And we're 4 times the size of the field when we originally mapped it and drilled it. And I'm very proud to say too that the FAR exploration team, headed by Pete Nichols, were the team that actually mapped both the fan and the shelf prospects and sited the discovery wells on behalf of the joint venture. So if we look at deliverability, I know our friends at NOPTA didn't like to show flow tests or flares, but I tell you what, I like to. It's what we're out there for, and this is spectacular. This is a picture of flow test on the first appraisal well that we drilled. It was drilled on the crest of the field and intersected our big thick reservoir units that sit at the base of the field, and indeed they flowed on a combined just under 10,000 barrels a day. Our engineers are telling us that with a horizontal production well we could be achieving up to 30,000 barrels a day. So this is a world-class field. Average porosity in most of our reservoirs is about 25%, and we were hugely encouraged. We at least doubled what we had expected pre-drill on the flow rates from these main reservoirs. So the third, and we also flow tested SNE3, the second of the appraisal wells, and we tested the thinner reservoirs that sit at the top of the field. And we haven't, as I said, yet seen all of those reservoirs and flowed them in the oil, because we still have intersected in the gas cap, which is frustrating. But the forthcoming drilling program that we're embarking on starting in November this year will hopefully correct that, and we'll flow some of these reservoirs we haven't yet flowed in oil. So here is an oblique view of our field. You'll see the location of all the wells, and SNE4 was the last appraisal well we drilled. You can see we just got off the gas cap. We didn't flow test the reservoirs in that particular well. And connectivity is the last piece of the puzzle we need to solve. So our field is really a field of two primary reservoir families. There's a deep reservoir unit, which we call our 500 series. It's very thick and blocky sands. They're lovely and young and clean, and as I said, with great porosity. And we have made a statement saying that we believe we're commercial only on our thick blocky sands, the 500 series at the base of the field. And the upside and the cream on the cake is going to be proving a lot more of the connectivity of the thin sands that sit above those thick 500 series. We call those our 400 series, and the focus of the next two wells that our joint venture is committed to start drilling in November will be to both flow test some of those upper sands and also run an interference test, which involves setting gauges, setting up the wells to be listening wells, and then drilling a pulsing well, and then looking at how those pulses proliferate across the thin sands, and we get some measure of connectivity of how continuous they are across the field. So we've ticked the box for the size of the oil pool. Our operator Ken some months ago said the minimum economic field size out here was 200 million barrels. We're now on a 1C of 348 and a 2C of 641, so we're well past that. We have ticked the box for deliverability. All of our reservoirs are flowing at terrific rates, and each well that we drilled in the appraisal program confirmed that we had 100 metre gross oil column roughly across all of the wells. We had the same high quality 32 degree API oil, and we had good correlation between all our principal reservoir units. More so, I'm really happy to say that our whole appraisal program was completed safely, efficiently and under budget. And we squeezed in another half a well, which was SNE4, into the original 3-well budget. And costs are still coming down. And this is something I'd like to just spend a little bit of time talking about. When we drilled our first two exploration wells, we had a 5th generation semi-sub contracted for the drilling at $650,000 a day. And that's not the total spread, that's just the rig rate. When we drilled our 4 appraisal wells, some 18 months later, we contracted a rig for $330,000 a day. It was a 7th generation drill ship and performed immensely better than the semi-sub we had on our first drilling mission. And we are just in the process of tendering for a rig now for our drilling program in November, and it's looking likely we're going to be able to secure the equivalent of a 7th generation drill ship for under $200,000 a day. So costs of deep water drilling have come down by 2/3, and what's actually more important to us is the efficiency of the drilling. And what we've seen is that when we drilled our exploration wells, we had 70% non-productive rig time, which is abysmal, on the Fan 1 well we drilled. And we had an average of 10% non-productive rig time for the 4 appraisal wells we drilled. And in fact, on one of the wells, we had a 3% non-productive rig time. So it's not just the cost that's coming down, but what we're finding is we're getting the A-team on our rigs, which is really important. So our joint venture is moving ahead very quickly now to secure rigs for continuing the appraisal, ticking off this connectivity box, and then getting on with development drilling. FAR has got a lot more potential outside the SNE field. So the SNE field sits down here, and you can see the well locations in there. This is our prospective zone, as we've noted on the shelf. So as we drop off the shelf, we're into the deep water, and then we're into the area where we made our fan discovery that we're yet to come back and appraise. But up on the shelf, we've got enormous prospectivity in the region of about 1 billion barrels on a P50 basis of undrilled prospectivity. One exciting thing for us, and probably the best $1 million I've ever spent in my career, was securing an option over the Jafir block that sits next door. And we've mapped a 100 million barrel prospect sitting here on the 2D seismic, and we've completed our 3D seismic some months ago and just taking delivery of those products now. For $1 million, we were able to secure an option over 75% equity in that block and operator rights, and we'll be securing that option in the coming months, depending on the 3D seismic results. So SNE is sitting at the moment in development pending. It's sitting in concept select, just pre-feed status. We are looking at an FPSO with tiebacks to any other discoveries that we make. We've done quite a lot of work on the economics around development here over the SNE field, and our plateau production is going to look like about 140,000 barrels a day. Our development expenditure is sitting between $12 and $15 a barrel for costs of effectively CapEx. Previously, which was about a year ago, our operator released much higher numbers, so the CapEx costs really are coming down. And our OPEX is sitting about $10 a barrel. Our break-even oil price is about $35 US a barrel. Our operator recently released some more economics, and I think the headline number here that's really important is that at a $70 oil price at FID, we'll be looking at $12.50 per barrel NPV. A year ago, we were looking at about $10 a barrel. So the economics have really improved over the last year. I'm not going to go through this, but we're really proud of the fact that we've gone from discovery to a statement on commerciality in just 21 months. It's an amazing achievement for our whole joint venture. Of course, our social licence to operate in Senegal is very important, and FAR has great relationships in country, and outside the program that we have with our joint venture, FAR also invests independently on social programs in country. So what's next for us in Senegal? We've got a firm 2-well program that we'll be embarking on, spudding in November. We'll be getting our new joint venture seismic data that we've shot over the northern area and also over the Jafir block coming in. We'll be progressing the decision on the Jafir block soon, and the joint venture will be hoping to deliver a development plan to the government sometime in late 2017. So for FAR, 2013 was the big year of farm out, 2014 was the big year of discovery, 15 and 16 have been appraisal and evaluation, and we've had a 100% success rate, which is amazing. We've had great achievements, and we believe that there are yet to find elephants still in the waters offshore Senegal that we look forward to uncovering over the coming years with our joint venture partners. So we are based in Melbourne. Feel free to contact us at any time, and I have to point you to the usual disclaimer. Thank you very much.